Yes, sir. All right.
All right, everybody. Welcome to another one. We back at it again. 18 days in a row. We're not stopping. We're not gonna stop. We're gonna keep going with it. You know what I'm saying? Welcome to Chart Talk. That chart talk. And today we're gonna be talking about psychology. That man P's ready.
Yes, sir.
That man over there looking like Birdman, shaking when he shakes his hands like that. Shout
You
out to
know,
Birdman.
the reason is because this is the episode that people have been probably waiting for, you know what I'm saying? This is
Nah,
the this is that episode that, it's about charts. It's about charts, but guess what? If you don't got that psychology down, the charts are going to trick you.
charts are gonna trick you, man. And psychology is probably when he said that this is probably the one that everyone's watching, waiting for. I'm over here like, nah, no, it's not, because more people want to know. Okay, how can I make $500 in a couple of minutes, like how we do, but don't want to know what it actually takes to make that $500 consecutively
Yeah,
over
you
a
want to
good.
keep that 500 or you want to just make that 500?
Exactly. So that's why I'm like, nah, they don't want this one, but this is the one that they need for sure. So
This is definitely what they need.
this
That's
is
facts.
it's not what they
That's
want, it's what
facts.
they need.
So look, we're gonna throw in some. We're gonna talk first about the psychology of the market, because there is a specific way that the market psychology moves. Because these candles here, guys, they're yes, it's price. Yes, it's giving you the price, but ultimately, what this is how investors think, and it's printed onto a screen. If they think the price is going to go up, these candles are going to go up. If they think the price is going to go down, these candles are going to go down, right? And these patterns are created over and over and over again. And I'm not talking about a bull flag, and I'm not talking about a head and shoulders pattern. I'm talking about this humongous pattern that it ultimately is just a whole bunch of emotions that
Mm-hmm.
create this pattern, not just an ABC wave, right? These are just a whole bunch of emotions that create this pattern. And when you get all of the emotions and you see this pattern, it's a really big indication that you're going to see a really big move to the upside. So, this pattern that we're going to be talking about today is what the insiders, the big money traders,
The big
what
boys.
the them boys, they create. This is what they need to see. They more or less create this pattern. um and a lot of us have heard of Richard Wyckoff and the Elliott wave theory,
Your grandfather?
um the Dow theory. This is literally based around that, okay? Time and price, all of that stuff. This is based around that. So, um, I want to show this chart, and this is the psychology of the market, and we should all be able to see this here. And it doesn't matter what asset class you're looking at, because I'm going to show some examples in all different asset classes of this pattern. And um and it really is, it happens on all time frames, but this is more of a macro thing that we're speaking about today. Like I said, it's on the market is fractal. Anything that we speak about will happen on lower time frames. It's just not as heavy, right? The lower the time frame, the less probable you are for it to stick. When you see this pattern on a daily, weekly, or monthly time frame, get ready for the big boys to step in, okay? Now, we're going to talk about each one of these real quick, and then we're going to talk about the top right. Because if you've never seen this chart before, If you've never seen it before, drop something down in the comment section because this chart might change the way you trade a little bit. It might change the way you look at the market. So, what happens first is there's this feeling of disbelief. And I'm going to use Bitcoin and kind of technology for the examples because that's just, you know, easiest to explain, right? And we could almost use like current examples right now with ChatGPT, right? At first, you know, with these technologies, people don't really believe in them. There's like a disbelief in these things that like, no way is this real. No, I don't believe in it. I don't think that this is really how the world is going to work anymore. Look back at the 90s with the technology stocks. No one believed in the internet at first, right? When gold has had its moments, right? So at first, it always starts in an area of disbelief. Let's even talk about this. So I got a question for you, AB,
Yo.
and let's be honest. When NFTs came out, did you believe in that at first? How was your first initial thought of the metaverse?
My first initial thought of the metaverse was like, oh, this is gonna be cool, but it's a fad for now. Honestly
Okay.
speaking, I thought that it was a fad.
So did you
And
think this rally will fail like the others? A fad in a way, fail like the others?
I
Did
didn't
you
think
have that
I
feeling?
didn't
Because I'll be honest, I did. I did not believe in the metaverse. I didn't invest into one metaverse thing.
I didn't invest into anything.
into one NFT
I didn't
because
I didn't invest into any of those things, but I will tell you this. I do see the potential. I did see the potential in it, but I
okay, I
didn't.
feel that.
But you know, when with the way how the market was looking at the time, I thought that it wasn't the right time.
Yeah,
And I
NFTs got introduced into the market around the
yeah.
belief or thrill area when Bitcoin was moving up.
And the only
But
reason why I felt like that is because of how much I am so interested and invested into cryptocurrency.
no,
That's the
I feel
reason
that.
why I was like, okay, this actually might be something that can pop off. I just, if I, if I had money that I could have just blown at the time, I'm not gonna lie to you. I would have probably dabbled into some NFT stuff. I'm not gonna lie to you,
I feel you.
you know.
Okay, and
But
then
I would
the
have failed
next
miserably because of
right.
look at it now, look at stuff now. You know what I'm saying?
You
So
got caught in this. You got caught in that. You know what I'm saying? And we'll
yeah,
talk about that
I
too.
got
We'll
caught. I
talk
got
about
caught a
that.
little bit in the thrill. I'm not gonna lie, but
Um,
I'm grateful that my pocket was looking how it was looking.
a lot
When
of people still have this feeling of Bitcoin. They still don't believe in Bitcoin.
hmm
But what happened is there is a move up, right? And when there's this move up right here, there brings hope into the market. And this kind of it either one of two things happens when there's hope in the market. And forget a recovery is possible. I'm gonna tell you what's really going on in this phase. It's either because obviously the Bulls have stepped in. Okay, the Bulls are here, and there's if it's really gonna be this rally, these Bulls aren't playing around, and you're gonna likely see this rising wedge pattern. You see it a lot after the hope phase or like this first move up. And what this is the Bulls and the Bears are slightly battling it out, but
hmm
the Bulls are winning every time. The Bulls continue to win. Every time the Bears say, I don't believe in this, right? I don't believe in this. The Bulls say, well, you better have some hope. I don't believe in this. Well, you better have some hope. I don't believe in this. Well, look, this rally is real. And then the optimism comes out. And all the Bears, the optimism rally, what happens in a technical term is that it's almost like a short squeeze, right? The shorts get just obliterated right here. Everyone was shorting here and here and here. Well, what happens is their stops get triggered and it's a big rally up. Okay. And this optimism rally is almost a triggering of stops. Okay. And
Ooh.
that move right there. It excites everyone in the world. And it gets everyone and their mom seeing the move that everyone down here was trying to tell you you should believe, but I don't believe in it. I don't believe in Bitcoin. I don't believe in blah, 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 right? And of course, there's all the different types of markets, right? But these people down here at this point, shit, they could take profit if they want to, and they freaking should. They should because they have 10x, 20x their money in a very short amount of time, guys. Think about how long we have been in this bear market in crypto, and then think about how fast the moves up happen. You can genuinely make 5 years worth of money in 1 year in the crypto market. Let the bear
Genuinely.
market come back down, chill, have your money, and then the next rally, have some saved up to do it again. And these markets are very cyclical like this, guys. But okay, so what happens next? Okay, the belief is set in. Everyone believes in it now, right? Everyone believes in it now. And the market is pumping because everyone is now jumping in it. And there's genuinely no one going against this market. So what happens? There's a rally, there's a crazy pump.
Hold on, give me 1 second,
Okay.
P. 1 second. Just to double check. My bad. Okay, no, we're good.
Okay, good deal. But after that belief, everyone does jump into the market, and there usually is that one last pump where there's this thrill or euphoria. And to be honest, the thrill and euphoria is right around the same time. The euphoria will come in sometimes as a stop hunt, and it's really tough to judge that stop hunt sometimes.
It's hard to
But
gauge the top. It's hard to gauge the top.
after a market has been going up for so long, and then it starts to consolidate and it breaks a high, that is almost your sign for a top, right? And that's your Wyckoff distribution type thing. And once you get into that, that's how you can try to spot these tops right here. But then what you'll get, this person right here, if let's see, a random market starts to appear right now, this chat GBT thing, okay?
Before you even continue with this, I wanted to give you another good just because we're talking about euphoria and the thrill.
Yeah.
The Super Bowl has banned all crypto commercials.
No way.
The Super Bowl has banned all crypto commercials. I forgot to tell you yesterday.
In last year, it was quite the opposite.
It was literally the opposite, where every commercial was about
Oh my gosh.
crypto.
Or it was either last year or the year before, whatever that one year was, where it was like crypto.com stadium was even
Or was it
hosting or
2021?
something.
It
That
might have
was
been
nuts.
2021, but
That's-
and when were they doing all of that? When were
In the- Right here.
right in the nick of where the thrill and the euphoria, oh, right there, right in
Maybe
the nick
even
of it.
right there.
In the
even.
complacency. Yep, right over there, right in those 3 stages. That's when all of that was happening. Because
And
after
so
that one Super
that's
Bowl,
a good point. That's a good point to make right there.
that's
All
actually
these
perfect, right?
all of these crypto exchanges were marketing like crazy. The Lakers stadium got bought out. A couple of other stadiums got bought out or changed their names at least. I don't know how that really
Mhm.
freaking entails, but that's wild. And that really was right here in this time. And to it, your job really as a trader isn't necessarily to try to catch this and this up here. It really isn't, guys. I'm telling you,
It's everything in between.
if you try to only do that, you're gonna be miserable. You're gonna have 3 to 4 years of doing nothing, and then you're gonna finally do something, and then you're gonna have another 3 to 4 years, or no, probably just 1 to 2 years of doing nothing, and then you better hope you catch the top. So really, it's not. We're speaking about all of these emotions, so you know when you should know when these tops and bottoms could possibly be in, right? So after there's like a blow off top, which is a technical term for this, euphoria. Stop hunt is another technical term. We have the up thrust and distribution is another technical term. You'll get a sign of strength to the downside. And when you see this big pullback, a lot of people are gonna say, buy the dip.
Buy the dip. Buy the
This
dippers.
this right here, when you hear buy the dip like 5 times, the fifth time is cap. I'm telling you. They're
I
these
will say the
guys,
fourth time.
right?
I'll say
So
the fourth
the
time.
true dudes know that this first dip was the real buy the dip. Okay? And no one in their freaking right mind bought this dip except next wave students and us, right? We're looking for that dip, right? But even that is like super risky. But this would be like if Bitcoin hits 12K or lower this cycle. If Bitcoin hits
Oh
12K or
yes.
lower this cycle, this would be um, just a disbelief.
Get your bands up.
Um, and then and then um, after that, when you get that move like this, okay, and then you get this big move down, a lot of people are going to say buy the dip here. These were valid buy the dips kind of over here, and even this one right there is kind of sketchy. But when you get this big shift and someone tells you to buy the dip, buy it and then sell it quick, because it's coming back down. Now a lot of times, I'm gonna be honest, I don't think it usually comes down this fast, but I'll show you some examples where it looks pretty damn similar to this. And this says we just need to cool off for the next rally. That's people, who bought the dip, who think it's going to continue. And it's hard not to want to buy that dip in real life.
It really is
So
hard.
if
The FOMO.
if you start to here's the real jump. If you're an experienced trader, because if you're inexperienced, guys, you probably will have to go through these emotions a couple of times to feel and see it in real life. Even though we're telling you how it's going, it almost takes going through it, unless you have a mentor holding your hand, okay? But it almost takes going through it, and until you go through it a couple times, you're not really gonna know. But what was it? I don't know what I was getting at with that really. But next phase right here, we will break
I
this
think
low.
I think what you were getting at was like when it comes to these markets, when it goes super bullish, don't try to buy the dip after you've seen a shift of structure,
Yeah.
because
And
you
if
might
you've
just
been
end up
trading
losing
for a
more
long
money.
time, you should know once you start to feel FOMO, you're probably at the top. Okay? Because if you've already made it through this whole thing and now you're starting to feel like you're gonna get into it, well, as a trader who's been in it a long time, these emotions shouldn't hit you as hard. When they do start to hit you,
That's
you
when
should
you
be
should
like,
start getting
okay,
cautious.
okay, there we go. Finally, I'm getting hit. Because let me tell y'all, we got hit with these feelings too. But I'm telling you, I did not even feel an emotion on this last bull cycle until the very top. And it was making me question, some of my mom's friends were asking me about Bitcoin. I
My
was seeing
my
it on,
mom, my mom in
so I
freaking
was seeing it on
Africa was
Sports
asking me.
Center, seeing it, and I was just like, this, it's either about to make one more jump or this is the top. And it was the top, right? So you'll get this break of structure right here where the market will break below kind of the top move. It'll make an impulse and it'll break below. And a lot of people are going to start getting worried because structure is shifting. And there usually will be kind of a quick move down right there because a lot of buyers get their stop losses taken. And the market moves straight down
Margin
kind of
call.
quick. Margins you real quick. This dip is taking longer than I expected, right? And people are like, dang, why is it taking so long? Some people are like, it's gonna hold here, it's gonna hold here. And then when it dips below, people start getting a little bit worried, right? And they start to shift their portfolios around into the stronger companies. Now, this is a big part of the denial phase. Okay. When a market becomes bearish, because guys, when a structure breaks like this, it fails to make a new high and then makes a new low. Every technical analyst in the world is going to say this is a possible bear market. Just is what it is. When you're in a bear market, you do not want to be into risky assets anymore. So, in the crypto market, what that means is you need to sell all of your Shiba Inus or whatever, your cum rocket coins and shit,
Oh
and
my
you
god, I
need to
can't believe that was a thing.
and you and you need to get into stronger coins like Bitcoin and Ethereum in the top tens and Matic right now, you know? And so the denial phase is when people are just like, they they almost give up like, yeah, okay, we're not making a bull run anymore, but guess what? I have my money invested into good companies, and you'll start hearing these people who really made a lot of it, like your best friend or your homie in a fraternity that hits you up and he's like, oh bro, we should buy Luna. And he bought Luna and made a whole lot of money and then never pulled it out and then it crashed, and then that guy is now telling you, oh no dude, we put all of our money back into Ethereum, so we're good, the merge. And okay, when you start hearing people say that shit, that is them in full denial. Full freaking blown denial. They they blew the ship. They didn't take any money out right here. And now it's just like, well, they
That's
probably
funny.
invested right here, or even if they did invest right here, now the market's right. They're only 2 or 3x now. Maybe they're at break even. A lot of people are at break even right now or lower, and they're just in denial. They can't believe that this hasn't gone up yet. And they don't worry, don't worry, it's gonna go back up. You've heard them all. We've all said it.
We've all
Okay,
said it.
this is where we are currently in the crypto market. In my opinion, I believe we are in denial, and
Dang.
I believe we are seeing this move right here, right now. This baby pump.
Dang. You think we're in denial?
I think we are in denial, and
Ooh, man, he's giving y'all some.
I think people are,
Even I'm
you know,
now. I'm surprised.
now what we haven't fully seen yet, in my opinion, is this.
That's what I think we've seen. I think that we're actually in capitulation.
So if you're right,
Capitulation.
because guess what, you could be totally right. If you're right, what happened was the FTX situation.
That's
That
what put.
was
That's what I think
the
happened right there.
capitulation. So if you're right and I'm wrong, because shit, we could still
But you have such a good point about that denial.
we could be coming out of this. I personally feel like we haven't felt this yet or this yet. So
Okay, yeah.
for me, I still think we haven't had this yet. Now, maybe because I've sat through this before, it just, I don't know, it has gone long enough, I'll tell you that. It's been long enough timing. But with this asset class, I feel like the way it moves really scares people. And the fear has been there. We have seen it. So I could be wrong. I will be playing like this rally is there, right? Because I don't really try to time it perfectly, like I've said before. because the market has made a disbelief rally, and I could be being this could be me. This is a suckers rally. I that could be me right now thinking the move that Bitcoin has made is a suckers rally, and it could be this right here, and start of the whole big shebang. And but usually there's a move like you've never seen before. And really the FTX situation, I think about it and I could go either way. I could say that we're in denial because people are talking about we're in the best companies, blah blah blah. But then I could say the capitulation has definitely happened because we've had that move on FTX that it genuinely scared everyone. Now,
This is my own personal thinking right now. We are still above the prices of the previous all-time high. We're still
true,
above those prices.
true.
So since we're still above those prices, I can say that we're possibly still in. Yeah, I can see that we could still be in that denial getting into panic phase. If
And
price
we'll
start,
look at it.
yeah, we'll take a look at it.
We'll
But
look at it, but it's up in the air. It could be 50-50.
yeah,
Um, I feel like this hasn't happened yet. Who shorted the market? Why did the government allow this to happen? I want some type of government regulated bullshit to come in. I want the XRP case to do something. I want something like
I haven't
that.
even been keeping up with the XRP case. Dang,
I
I'm
want
lacking.
something to do something. I want the war to happen bad or good, something that makes the market do something. The government, as in inflation, maybe that was the case and it was the bottom at the time and now we're coming out of it. But I have a theory about the unemployment rate, and then depression. This really
Bro, with ChatGPT and them, and these AI robots and stuff like that, unemployment
yeah,
is looking scary right now. I'm not gonna
that's
lie.
what I'm saying.
Unemployment's looking scary.
Um, I agree with that, and I think with unemployment just hitting its lowest point in like 50, 60 years, which is amazing.
It's
I
about to
think
turn
that is
around
like
right now.
the fakest shit we've ever seen
Fake
in the
out.
history.
Fake out.
No volume. And then the last but not least, you have depression. And I certainly haven't felt depressed on any of my investments on in the crypto market yet, but
The only reason why is because my dollar cost average price is still around where it's at. But once price starts to go lower, man, that's
yeah,
yeah.
it's hard when you buy in right here. You don't really feel it as much. It's more
Yes.
it's more for when you're buying up here. Now, this is a perfect segue to lead into this right here, guys. It I swear to you, you will not feel these emotions as much if you buy in down at the lows.
You do not.
And what this is going in on is simplified market cycle. This is basically what you see right here without the emotion. Okay, so take the emotions out of it at the top right here, and let's see if I can zoom in. Let's see. Cool. It'll no, it won't let me go over a little bit. No. Okay.
Yeah, that's
cool.
weak.
That's weak sauce. But we have right here when the market makes a high, this is basically your point of maximum financial risk where you the market's already made its move. So if it's gonna move any higher, which it could, I'm not saying it can't. If this is the most risky financially spot that you could be in, maybe you wanted to wait for the market to cross a certain level before you bought it. Well, sometimes waiting is a little bit more risky than getting in down here, which would be the point of maximum financial opportunity. So there's a difference there because there might still be risk associated with it, but the opportunity, the risk to reward basically is where it comes down into the better terms that we like to use as day traders.
Yep.
The risk to reward when you are at the bottom of a market versus the risk to reward when you're at the top of a market. Guys, you can't even measure it. I'm talking it's unreal. Whenever a market has made a move and you're stuck in this thrill or belief, you're not going to get more than 2 or 3 times the money that you invest. And that is being extremely generous.
Extremely.
I mean, holy crap, extremely generous because that's you having to time the top.
I
So
really remember when Bitcoin was like at like 40K
40,
or something like that. I
yeah,
said
guess who
that
bought at 40K, guys?
a whole bunch of
Elon
people,
Musk.
a whole bunch of people were buying. And I was
Everyone
like,
bought at
there is no
40K.
way I'm buying at 40K because in order for me to see at least double my return, that meant that we needed to see Bitcoin go to 80K. And the
Exactly.
likelihood of that was not happening.
It was
So
way lower when it was at 40K than it was when it was at 10K. There was a more chance of you making money when Bitcoin was at 10K than it was at 40K. But guess how many people wanted to buy Bitcoin when it was at 10K?
I
I
remember
didn't
we were,
know I didn't know anyone.
I
I didn't know
remember I
anyone.
remember when Elon Musk went on to freaking Saturday Night Live or something like that, and we were literally telling people do not buy.
We were saying short Doge right now.
So
It was like the
like,
high of the year, I swear.
and it's just that's just when things
It's
going
the
when
emotions.
it's the emotions, and you know what's crazy because you feel these emotions even day trading, but it just looks different. It just
Yes,
looks
yes, very
different, but
good
you look
point.
at these emotions in day trading, like especially like I remember when I first started trading and stuff like that, when I'd be in the thrill of like I'll be getting into a trade at the moment that it's at like the thrill area, and then when I get in, then complacency happens, anxiety happens, denial happens,
Right.
panic, and then capitulation.
Exactly.
It's so
Exactly.
crazy how like this it really shows you the market cycle itself and what's going to happen to you when you're in a trade. It's so
Yeah,
interesting.
100%, 100%, 100%. And really, look, you can see right here the colors, guys, how it's red right here at the top, right? And then it gets like green to yellow. And this is your area where, you have less, blue to green, I would say, is where your financial risk starts to increase. And that's right here, your blue to green.
That's why
You
them thugs be calling people green because they're always on go and they're ready to get they're ready to get their stuff stolen because
And
that's
this is where the
basically what it
greed is
is.
going to step in like crazy. Oh man. All right. So here's what we're going to do. We're going to look at some charts, and I'm going to keep this on the screen. Now we're going to get into some charts, and we're going to look at a couple different markets. So first, we've been talking about Bitcoin. So let's look at Bitcoin. Bitcoin makes this pattern more than anything. Okay. And we'll look at it back in its first time it made the cycle. It makes really pretty cycle moves. All right. So, and then let's bring this guy back. Where'd he go? Let's go. Bring him back real quick. Here we are. All right. So you can see right here how we have the disbelief drop, and then we get the hope, we get the optimism, and then off to the races. And then very top of the move is the euphoria. Okay. Right after that, we get the sharp drop off. And everyone right here is probably thinking, buy the dip. Well, they might have got a little bit, but once this dip is broken, it's pretty much signals the bear market, and we get into these. Now look, this is just my opinion. I don't ever really think these are as sharp down as this, they usually take a little bit longer to play out, but we get a move down and then another move down. This is like the capitulation, and then it goes sideways. And this is the anger, depression. And this move right here, this was probably, everyone's thinking this is a sucker's rally. But really, it started the next big, big, big move, okay? So let's go into like a log chart. And I need to bring this back because you can kind of see it, I think, better on the log. Okay, bring you back over here. Here's what happened again. You really can't see it better on a log chart, so forget that.
Yeah, I was about to be like, this one looks a little better.
Yeah. This one's picture perfect. Okay, this one was in 2017.
This was when I first heard about Bitcoin, 2017, 2018. That's when I first heard about it.
And this is really, you see the euphoria move, right, guys? And here's the thing about this. If you were to have invested here, okay, where the people were saying, nah, it's probably not going to do much. This is like $1,000. This is like, I don't know, $2,000. It did 10x from that. But when it already started to make this move here, it's at 10K already. So yes, you doubled your money very fast, but these guys 10x their money in
way
2
faster.
Months. You know, like so, your financial risk was at, and then did you take profit? Probably not. Probably not. You thought it was going to go to
get more money.
50x.
Yep.
So, because you heard of everyone's stories in the altcoin market going 50x, because when Bitcoin does 10, random coin does
30.
50, 30 exactly. So you're hearing all these and getting all these emotions stuck into it, and then it did this whole move down. And guys, these moves are not for the weak-hearted. So these corrections are 83%. That's not easy to stomach when you're waiting and putting real investment money in. Okay? I know we're all still relatively young. I'm almost 30. And I'm getting to that point to where I'm not about to just put freaking 10 grand into a market at random times when I could go start a rental property with 10 grand. You know what I'm saying? I could do a lot of things. So you got to be able to time a market. And when you put money into here, and I'm saying 10 grand, a lot of people put way
more,
and have to suffer 73% loss. And look, that was when you bought it in the middle, dog. You thought you were going to 10x your money, and now you're down 70%. You just put 100 G's in, and now you only got 30 G's in there, dude. Nah.
So and then some people are gonna want to pull out right there. Like they're like, I've taken this financial risk. How much lower is this gonna go? No, I'm just gonna get out. That's what a lot of people will do.
And it does a 50% drop in 1 month right there, and it just wipes everyone out. That's kind of what I'm waiting for. So in our market, I'm kind of waiting for this 50% drop and then this sideways movement to make people think like, what the F just happened, right? And it goes sideways for about 3 months. So let's look at Microsoft real quick, because it's done it in this asset class as well, guys. It's done it in this one. So this was the run of the tech stock boom. Okay, when tech stocks became a thing, and it had the most massive run up, and it was very similar to Bitcoin. How, you know, this is a 1,000% run up, and if you would have got in right here, you were golden. But if you got in here, I mean, you only doubled your money.
You only doubled your money.
Great job. Hope you got out at the very top, but you probably didn't. Now, what I want to show on this one is this move right here. Okay, you get this big blow off top, euphoria. Oh, the market's gonna continue to go to 100, right? Because at this point it was at 60. So you know people were calling for 100 back then. You just know it was, especially once it broke 50 right here. Oh, 100. Here we go. Well, it didn't do that at all, and it did a sharp move down. Well, I bet you everyone and their mom was saying buy the dip, buy the dip.
Everybody.
Well, guess what, guys? That didn't happen because the market cycle played out already. And now, not only did it not go up here, it made another drop here. And this was Lehman Brothers. This was one of the biggest crashes ever in history. Banks shut down and that's what we're looking for. I'm talking, I want one of these moments where the
People are
floor
mad.
falls out. And it might have been the FTX, guys. It might have really been it, but I'm still looking for something big. I want to see how far down. Ooh, and that's a 30% drop for a stock.
For
That's
a
no
stock.
joke.
Oh man.
So it ultimately, that was the spring down. That was the last shebang before we never ever think about coming back to that. Ever
Oh my
again.
god.
So this was more of a reaccumulation than it was like a distribution kind of fallout. Very interesting move here. But last but not least, let's look at the metals in gold, because back in the 80s, gold had its run as well. So let's look at gold. Now, Nixon took gold off of the standard in the 70s, I believe. So that's why it had this big ass run up, because gold was like, it wasn't what it used to be, right? And if you held gold at the time, it was worth a lot more than what it used to be. History changed back here. So once it had its big run, and when guys, when a market does moves over 1,000%, let's see what this did, almost 1,000%. If you see a market get anywhere close to that, and then it gives you one of these, that's it.
When it reach
Don't,
when it goes back bullish a little, bit, sell.
yeah, this is like the ultimate bearish setup almost in reality. If if you're if you missed this, well, just wait for it to blow off the top right there, and then you'll have a great bias for the downside for years. For years. So I just wanted to show y'all how it does this in it does it in every market, guys. I'm not about to go flip through every market and show you how it does it, but it does. Go to your favorite stock, go to your favorite, there needs to be some market cap to it. Okay, randoms aren't gonna have it as much. It's the when there's an actual group of investors, that's when you'll see this pattern.
Yeah.
Because you need investors' psychology to really start creating the pattern. Because, guys, it goes even deeper, because investors have to have a certain way, big money
That they
investors
enter into the market.
that they enter. Exactly. They cannot just enter like we can with our 100 dollars or 200 whatever,
More like 100 units.
even your
like
$100,000 ballers. Okay, that's nothing, guys. That is nothing. These guys have got in
units of
they
money.
got in. They had to get in down here strategically without anyone really knowing. And now they let all their shit go right there. They let some of their shit go here. They let some of their shit go here because they got in way down here.
What's that
even
percentage?
This move,
Yeah.
to here, guys, they've doubled their money. Okay, let's let a little bit go. Now we're risk free. Oh, when it gets up here, now we've tripled our money. Oh, it gets up here, we 8x'd our money without even in a year.
Without even sweating. Well, a few
2
years.
So they the way that they get in the market is a lot different than the way we get in the market. They have to have people selling to them in the way of the capitulation. They need 50% of the market to drop. So freaking so many people are selling that they're like, thank God we can just buy this up. And it looks like people are selling. But really, they are stepping in, buying every single sell order they can get. And that's the only true way that they can build their inventory. So we have a couple of questions to talk about. Just if that wasn't enough for you, we're gonna get into some questions.
Some
And I'll
questions.
and I'll put this back up on the screen because
It's good to be up on the screen.
this is good. Good to see this. You wanna etch this into your brain, really. Okay, so as a 5 year, almost 5 year trader, AB, you're almost 4 years, I believe, or
Almost
you are 4 years
March.
or whatever.
March makes
Okay,
it 4 years.
perfect. What do you think trading has taught you most about yourself?
Um, dang. It's funny because that was the first question I saw, and I didn't even think about it too much. But honestly speaking, if I were to like pinpoint an answer, I would say that the thing that trading has taught me the most is that
Taught you the most about yourself?
yeah, no, it taught me the most about myself is that I'm not as patient as I thought I was.
Ooh, that's good.
I'm not as patient as I thought I was, and that I don't, and that I mean, I think that this is what every beginner trader has: blind faith, like too much of it, or too much of arrogance of blind faith.
I feel you.
You know what I mean? Whereas, like,
That's
oh, I
good.
could make millions off of this in a year or something.
Right,
You know, that type of thing, which it's possible, but it's like it's not a reality.
right, right. That's good.
So that's
I think
that's that's like one of my main things, I think.
I think mine, what it's taught me most about myself
Hmm.
is that I could agree with you on that. um it kind of showed me that I'm not as patient as I thought it was, but I think even more than that, it it taught me kind of how analytical I actually am. Like, I didn't know I was so
Mm.
like, I need this to do this, and then I'm very, and I can analyze like a mother, and I didn't know I was so like strategic.
I
You know what
get
I mean?
that.
I didn't
Yeah.
I didn't know that, and trading really opened that up to me. And now, like, in every part of my life, I'm thinking more analytical or more strategic,
Yeah.
because
That makes sense.
that's
Yeah.
kind of who I am in trading. So
And
it
I
just kind
and
of
I had
brought that out
also
of me.
learned, and a part, and even I think I had also learned that I was a bit impulsive, and I think that trading had even made me understand my impulsiveness when it comes to life, rather than even just in trading. Like, it made me even understand my ADHD a little bit more, if that makes sense. You know?
Yeah, it does
Yeah, like
definitely.
it's kind of weird because it made me be like, okay, wow, this is when I feel this type of feeling, that means that I'm really feeling impulsive. But then when I take myself out from that feeling, then I can make a smart ass decision rather than making an
Mm,
impulsive decision. You know what I
interesting.
mean?
Very interesting. Yeah, that's cool. Um, okay, I got another question, and this one's interesting
Mm.
because we're both mentors and we both teach people.
Mm-hmm.
But do you think that a trader who was taught incorrectly for the first time can still become successful?
Yes.
And okay, I was gonna say successful could mean different things, but
No. In any sense, I think so. And the
Okay,
reason why,
so state your case.
the only reason why is because I do truly believe, as much as I've seen a lot of ugly in the world, I do believe, and I have seen that when people really want to change for the better and they want to change for themselves, they would truly come back and be like, "Yo, I really want this, and I'm willing to prove it." But it's only when that person has gone through like the mud, in a sense,
Right.
and where they've gone through like the deep end, that's sometimes where they need to be. That's sometimes where they need to be at in order for them to turn it around. You know what I mean? And I feel like there's a lot of people who can get like that with trading, and more than likely, people who get there, they're gonna stop trading. Like more 90% of those who get to that stage and at the
Mm,
bottom when it comes to trading, they're gonna stop trading. Like
mm.
that's just a fact, you know. But those who really see not that, they're like, no, this is something that I can really like see myself trading as. I feel like those are the ones that could potentially still become a successful trader in whatever sense that they are talking about. Like that
So that's
individual.
interesting. That's interesting because it's like and I can see where you're going with that, and I can agree in a certain manner because you answered yes, but then you said but only 1 out of 10.
Yeah.
So it's like yes,
Not that many
but
people.
but only 1 out of 10 of y'all is really gonna be successful.
I'll say
So
I'll go ahead and even be generous and say one in like 2 out of 10. But that's me being extremely generous, like extremely.
I would say I would say yes, but the amount of time that it's gonna take that trader versus someone who is just has no nothing is gonna take you longer.
Mm.
And the reason I say that is it's very similar to an athlete. Okay, if you have played basketball your whole life, okay, maybe not on a real team, okay, you're just one of those LA fitness hoopers. I
Ha!
get it. You're cold, bro. You're good. Like you can shoot threes. I get it. Okay. But your shot is so ugly, dog. I don't think you understand how ugly your shot is. But so look, you're still hitting threes though. You're probably not hitting them like you're hitting like 1 out of 5 and you think you're hitting like 3 or 4 out of 5, but really you're not. And if you are, you're hitting it in practice, right? So you're doing it on a demo account. Okay? If a professional came in there and offered you lessons and tried to switch your jump shot, you are not you're physically not even going to be able to really do it. AB, how many times have you tried to switch your shot or tried to mechanically do something different and then end up going,
Right back
nah,
to it.
I'm me. I'm doing it this way because I've always done it this
Way
way.
too
How
many
many
times, bro.
way too many
In
times. And that's
basketball,
an athlete
and
thing.
that's just
That's an athlete
that
thing.
is dead ass an athlete thing, bro. Even to this day, I still have my habit where I'll shoot the shot, and I've always had this habit where I'll like my arm my wrist will bend a weird way, you know, and I still have that issue to this day, and it's just like what Peyton said. It's like even if someone were to come in for like an hour or two, it has to be multiple the time. It
It
will
would
take so
take
much more
time.
time for that
And
habit for it to go away.
versus someone who has never shot basketball in their life, if they get taught by Steph Curry versus if AB gets taught by Steph Curry, I'm sorry, but this freaking random kid who has if he's an athlete,
He's
he
gonna
has to be an athlete. He
he's
can't
gonna
just
run
be random.
circles around me.
He's gonna run circles around us all because he's learning the for the first time the perfect mechanics. But if he just tries to come up with his own mechanics by himself, and then kind of creates a little system that is okay. And the thing about it, guys, is you don't have to be a professional basketball player to shoot threes and hit threes
You
and
don't.
make shots. But it's not the same as like being a professional basketball player. Just like in golf, you can hit a golf club or a golf ball and you can hit a couple good shots, but you're not a professional golfer, right? So I would say yes, you definitely can still become a successful trader, um, even though you were taught incorrectly the first time. But I'm telling you, it's going to be difficult. So we stress, mentorship. And I wanted to kind of bring this up at the beginning, actually, because I brought this out. We have this, all of this in our mentorship program. Okay. TradeTheNextWave.com. Go there, check it out. On the educational platform, when you become a member, you get, all of this. But right here, Trading Psychology, we have a full breakdown of what I just went over and a ton of more stuff. Okay. It's really, if you're really looking for mentorship, this is what you need. You don't need to learn ICT's new method, right? He's not gonna teach you anything that you don't already know, honestly. And he's just gonna kind of mess up your entries and make you think too much a little bit. But let's go to the next question. Because we both kind of agree on that.
I mean,
You say
I want
one
to
out
kind of
of
go
10,
back.
2 out of 10.
I kind of want
I
to.
say,
I kind of want to go
yeah,
back into the mentorship thing. Both of us, both Peyton and I, we're both are products of not having mentors. So we
right.
know that it takes longer to teach yourself this rather than for you to have somebody teach you it.
Yep.
Especially
That's
if you're
facts.
fresh. Even if you have your past experience from trading, even it like just getting taught by a mentor versus you trying to figure out by yourself, you're gonna save a whole lot of money and you're gonna save a whole lot of time. Like that is just on in any, obviously it's in any industry, but I don't know if there's anyone that is like that much more, if it's so much more like in your face than with trading. I don't know if
That's true.
I don't know if that's like, how do you feel about that last part that I said? If it's like
No,
more.
I feel like trading is one of those. It is just one of the most difficult ones for sure.
Okay, yeah. So that's just all I wanted to add on. But yeah,
See if I'm trying to move this a little bit, but it won't let me. Let's see.
it really
If I
won't.
grab
Wow.
Okay, let's see if it'll let me grab this guy. Nope. Okay. Well, I tried to put it on the screen, but it won't let me. So let me clear this out, and then clear all drawings. Clear it out. Oh well. Okay, so next question. Why do you think traders have such a difficult time when they're switching from the demo to the live account? Why is it that these traders, and we see it all the time, bro, but there's a lot of traders out there who don't get to express this to other people. Just know, traders, we know that when you're on demo, you're using bigger lot sizes than you're supposed to. You're trading trades you would never trade. You're you're not following your strategy. You're taking other people's trades. I mean, everything in the book is happening right here. You're over trading. You're starting $100,000 account when you
You're,
damn sure know that you aren't going to be trading with $100,000.
you're
Okay,
taking
you're doing
people's
all these
signals.
things. You're doing all these things, and then you're getting happy when you look at your demo account. AB, why do people do that?
Um, damn. The demo
Why do you
account.
think? Like, why do you think they do that? Why do they go so hard on their demo account in so many wrong ways? Maybe they even go the 1 out of 10 people who do it correctly. But then when they go into the live account, why is it so different, do you think?
Definitely emotions.
Boom.
You're more than likely emotion. Not even more than likely. 100%. You're 100% emotionless. I'll say 95% because I don't want to put it all like in a box. But you're 95% more emotionless when you're trading a demo account because you know you have nothing to lose. You have absolutely zero things. The only thing that you have to lose is your time. That's the only thing that you have to lose when it comes to demo trading, which is actually funny because time is the most valuable asset that we have. But when you get
That's
into
interesting.
that live account, that's when you know that okay, my actual hard-earned dollar is out there now in the market, and now you're gonna want to be watching your dollar because it's just like when you have a $20 bill. If you have a $20 bill and somebody takes that $20 bill, you're not gonna be happy about that. You're gonna be like, "Yo, give me back my money." You're gonna get emotional about that $20 bill that you just got taken from you. It's the same thing with trading. Once you have your money being taken from you, your emotions are going to be put out there so hard. And then when you're making more money, that's when your emotions are going to even be put more into display, but in a positive way. So it's
I like
that's
what you said. I like what you said. You said on demo, the only thing that you're spending is time. And when I think about it, in this world that we live in, people do not have any patience whatsoever.
ooh,
Whatsoever. None, 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 none. And so I think a huge part of what happens, especially at first, is people get into their demo. And if they even get into a demo, first of all,
and I'm not gonna
um,
lie, I was that trader who hopped right in and
hi,
was
my name
like,
is Peyton, and I rarely used a demo at first.
I wrote right in. I'm that guy. I went right in 3 4 times, and I'm like, all right, learned my lesson too many times. Now I gotta go to demo. So
Yeah, and
I
that's
was him
okay
as well.
too. If you're one of those traders, you're not alone. If you're not like special or you're not a degenerative or anything, you just
No, he's lying.
you
You're a
like to
degenerate. He's lying about that part. You are
you're
a
a little
degenerate.
bit. You are actually
Because
because you
every single person who has ever introduced you into trading, more than likely has said use a demo account first.
yeah, and then you didn't.
And then
So
you did it. So
you
you're
probably have somewhat of a gambling issue as well. And you probably have less than $1,000 in your
actually,
account.
but
So,
but and then this is where I want to speak from my own personal experience. I also think that it has a lot to do with a lot of people want to pay their bills, and they're like, this is because this is what I was thinking when I first came into these markets. I was like, I can't believe I've never even heard of this before. Like, what have I been sitting under a rock? How do I not know about forex trading? How do I not know about cryptocurrency and all this stuff? This can literally change my life in a matter of months to a year if I take it serious and stuff like that. So even that will to like, oh, I want to trade so that I can make money so that I can be able to feed my family. I think a lot of people get caught up into that as well because that's probably the main thing that I got caught up into.
mm,
That
that makes sense too. And people just they see it on demo and they see their fake stats on demo and
yep,
they think it could be real.
yep,
And so they convert it over to a real account. And
yep.
then once it's real money, when you're in drawdown, really $100 to $200, when you're really in drawdown 25% of your account. And
Off of one
an,
trade.
another thing that happens, guys, a big thing is people will start that $100,000 trading account on the demo because that's like what it will generate for you unless you go in there and actually do a real demo. And it'll give you 100,000 and you'll get used to seeing big numbers. You'll get used to placing big lot sizes. You'll get used to seeing, oh, I made $1,000 today, and that will start to become a fake reality in your head.
Whew.
Then you will go and put your money that you really have, which is not $100,000. It is,
Probably $400, $500, a
let's be
thousand,
honest,
two
it's not
thousand.
100,000. So it could be it could be that number, right? It could be $1,000. Let's just say 1,000. That is 100 times less. Most people do not use 100 times less risk. Most people are so used to seeing and so used to thinking, I've been doing demo for 2 weeks, I've been doing demo for 2 months, even. But if you've been demoing incorrectly and you've been demoing with that big of an account, your mind is going to think that you can produce $1,000 a day. And if you're gonna be, say you do
Whew.
great, you're gonna go put your $400 in. You're gonna go put your $5,000 in,
This
and it's
man is
gonna be
throwing shots at
gone.
me. This man is throwing shots at me because this is all me right here.
Well, no, it's not on you. It's on every single person. This is what happens. This is what happens to every person,
Mm-hmm.
dog. This isn't you. This
Oh
is
no,
me.
I was
This
just,
is
I
everyone.
was just talking shit.
No, yeah, but you know what I'm saying. Like, and that's how it goes. And if you are in that cycle right now, you can get yourself out by getting a mentor. Just that might be the only way to not go through that cycle, because honestly, I don't think there's any other way. You're gonna have to go through it. You're gonna feel these emotions in your demo account, and then you're going to hit a euphoria phase in your demo account, and this is where you start your live trading. You're going to get in here and start live
Ooh,
trading.
that man hit that.
And so this is where most people start to live trade. Even actually right here.
Thrill.
You know what? Most people start to live trade right here. They start to believe
They start to
that they can
believe
do
it,
it.
and then they go and they flip this account, and they
And they
go
flip
and
their
they flip
account.
their account. They're euphoria. They're a genius. I've made so much money. Oh, the most amount of money that I've made was $20,000 off of one trade. But then guess what? I went and lost it all the very next day.
Lost it all the next day, and then what did they do? They loaded up another account and they lost it all the next day.
Mm-hmm.
Then they go through a phase where they're probably very angry and depressed because they don't know how to trade. They thought they did, and they get through this anxiety, denial, panic. They blow like their last savings. Everyone has been there, guys. And then they go through this phase. This is the learning phase. This is the true learning phase where you actually go and get a mentor. And once you finally get a mentor, it's going to be funny because you're going to have a rally right here.
This
And
is a
you're not
sucker's
even going to
rally.
believe it.
You're not even gonna
You're not
believe
even
it.
going to believe it. But guess what? That's the freaking rally. And you're about to really hit a big move in your trading once you get a mentor. This is happening right now to one of our students named Justin. Okay? He went through trading and then went through trading, and then he found us
He found us
here.
around this. Yep.
And now we've kind of refined his strategy. We've given him some things to study. He's a very, very, very smart individual, and he's very systematic as well. And he's literally telling us, "Hey, I don't believe this. This is not real. How am I having this much success? I almost don't believe it." And so we're seeing this happen to our students in real time. So we know this happens to other people.
It's
Guys.
happened to
We know-
us. So
It's happened to us as well.
We've
We know how
we've seen people
transfer
in,
goes.
we've seen people in complacency. We know when it's like, oh, when our moms start talking about stuff, we know that's the
Yep.
time that people are at that euphoria / complacency era of markets and stuff like that. We have the experience, and it's so crazy how you see it in different forms, but it's
Yep.
the same thing over and over again.
Exactly. Whenever a trader gets introduced to trading and they find a strategy and they're rich. Guys, when anything moves this fast, anything in the freaking world moves that fast, get ready for it to come down. Just because that is the psychology, not just of the market, of everyone, really.
We're alive.
Okay. We got a couple more questions here. What's worse, in your opinion?
Oh,
Missing or not taking a trade that went and hit TP, or getting stopped out?
for me, it is worse when I don't take a trade and it goes and hits my TP.
I feel that. I feel that. I hate losing. I hate losing, but I have almost I not almost. I've pretty much accepted at this point in the game that losing is part of the game. You are not going to win every trade. You're not even going to get close to winning every trade. So when I lose a trade, I'm kind of just like, damn, that sucks. And it kind of, I still, it not struggle. I don't struggle, but I still have
You have your
somewhat
challenges.
of a, I still have somewhat of a bad day, or less.
You have your challenges
I
because
just don't. I don't.
everybody does.
Yeah, definitely. Whenever I have like kind of an L streak or an L day, it's just kind of like I'm a little more quieter throughout the rest of the day. Maybe I try not to be, but if I really try too hard, then you'll be able to tell I'm trying. So, um,
Facts. That's
I,
how I
I
am too.
but whenever I lose or whenever I miss a trade, and then it goes to TP, AB, how hot do I get?
Extremely. Like that's when you're just like, man, I don't even want to trade anymore. That's really how you be. You really be like, I don't even want to trade anymore, and that's how I be
Bro,
sometimes too. I'm like, I don't even want to trade anymore because it's like I had this all set up, and it's crazy because I was talking to this one dude, and he's like, it's not this has nothing to do with trading, but then when I put it into a trading frame, I'm like, holy crap, he's right. And he's like, don't put any expectations on. It's like he said, don't put any expectations on the person. You know what I'm talking about here, but
yeah, yeah.
he's like, don't put any expectations on the person because when you put expectations and then the person doesn't follow through on those expectations, then you're gonna be mad. You're gonna get mad. You're gonna get sad. And then I'm like, holy crap! If you go and put that same logic into trading and not expecting anything from the markets, which we really shouldn't be, even when we play them, we really shouldn't expect anything because we don't know what's going to happen and we have zero control over it. We shouldn't place our expectations so much on the markets because that is then going to be able to help us deal with the after effects emotionally, and it's not going to affect us so much emotionally or psychologically.
That's good stuff right there. Because one of the main things that Mark Douglas says in his book, Trading in the Zone, he talks about having an unexpected outcome. Getting used to that
Yep.
unexpected outcome.
Mm-hmm.
And I think I have definitely gotten used to it losing being an unexpected outcome, but like we both said, there is still that struggle of that unexpected outcome that this might not even be a trade. This might not even trigger. The buy stop might not even hit. The buy limit might not even hit, and you might not even get to play.
Yep.
You might delete it, and then it comes back, hits your order that isn't there anymore, and then goes right your way.
Yep.
Ugh,
Painful.
that even talking about it gets me sick.
Yeah, exactly, and
Even talking about it,
and those are the things that
and
we
it
have
might
to
be
deal
something
with.
I struggle with forever. I don't know. It might. It really might be.
It
I don't know.
definitely is something that I've struggled with for a long time, and I still do struggle with it, and I'm not afraid to admit it. But it's way better to. It's in my opinion, it's way better for me to struggle with that rather than for me to struggle with taking a loss, which is something that I've just. I feel like basketball even helped me with this more than I can even think that taking a loss is okay because I'm not the most talented person, but I am one of the hardest workers.
Ooh, that's good.
That's I'm not the most talented. I know that I don't have the talent. I know that I'm not gifted with like skills like that, but I know that I am the hardest worker, and I know that I'm down to drop 100 times and then get back up the 101th,
That's
or the
that's a,
101st.
that's something a lot of people don't have. And I would say that most traders who have made it past 2 years would probably agree with us, even fully, on like missing the trade or not taking the trade versus
Hmm.
getting stopped out. Because if you've been in the game long enough, you've accepted that getting stopped out. So if you're a trader who thinks it's worse to get stopped out, you probably just haven't traded long
You haven't
enough.
traded long enough, yeah.
You just haven't traded long enough to feel that you might be still right here as a trader, and you might be still telling people, oh, your strategy just isn't good enough, or stuff like that.
Oh
But in
man,
in reality,
the old strategy
you just
talk.
haven't traded just long enough. And I remember telling people that stuff too, guys.
I
I
can't
you
wait
just
till we have that question brought up. It's not
Yeah,
today, but I can't wait till we talk about that. It's gonna be a funny episode.
Another thing that I was gonna say on this topic, on what's worse, um, missing or not taking a trade that went your way, or getting stopped out. Now, when you miss a trade, because this is recently kind of scenarios that are happening to us right now, actually. We've gotten we've set up, like, I don't know how many trades it's been at this point. I'm gonna say four, and I think it's either one less or one more than that, where the trade has gotten right to our entry with a limit order, barely misses it, and then goes directly into our profit area. um what that does after the third, fourth, or fifth time, I don't know how many it's been at this point,
It fries
what
your
it
brain.
does, it mushes it into mush potatoes. Okay? Literally, my brain feels like mashed potatoes because there's nothing you can do about it psychologically. Okay? When something happens to you like over and over and over and over again, the next time it's about to happen, you're a human, so you're going to react like a normal human would, and you're going to be a little bit, I don't know if I want to take
Damn.
this, or I don't know, because you're a human and there's nothing we can do about that.
Dang, you
Um,
just put some insight on me about my personal life right now. But I'm not gonna speak on that right now.
and so what is worse at that point, whenever you start to take multiple L's on multiple L's on multiple L's, what it will do, you will completely start to change your strategy.
Hmm.
You'll start to trade a different time frame. You'll start to trade a different asset class. You'll start to trade a different, complete everything will happen. That is literally, it's normal, because that's part of the psychology. If you're taking L's like that, you want to do that. If you've been in the game long enough, you don't really want to change your strategy too much, but you want to refine something. If you're taking trades and you're missing out on them, if this is the part that sucks, because once you start missing out on trades that start going your way, it's almost it almost like
Makes you.
those were trades that you should have won, and that your system almost won. In reality, it's like so close to a winner that it almost counts in the winning category in the statistical world, that now you're probably going to get served up some L's that you don't get to
Ooh.
balance out with those almost W's that you should have been able to put in the bank, but the market just barely missed it. So now what's going to happen is those misses, or those trades that you deleted, that you didn't take, that you should have taken, it just, I don't know why you didn't take them. Now that those aren't in your playbook anymore or your MT4 slip anymore, right? Because they're misses, they're nothings, they're zeros. But in the grand fucking scheme of things, they were technically wins.
They're part of your
Now, if you start to
statistics.
look at your statistics, you aren't gonna have like if you have three trades that almost hit, that barely, and I'm talking barely, guys. I'm not talking
Like
this
one pip.
BS. I'm talking one pip, or the trade that you had it, you said it was going to do this, then this. The market did it exactly, but you didn't take a trade. Guys, the next trading opportunity just got a little bit less probable. It did. It just did
It got,
because that one was basically a winner and it didn't even count.
and this is gonna
So,
bring us into into the next question, right?
yeah, basically, it brings it into the next question, which is after you have a certain amount of wins or a certain amount of losses in a row, do you trade with more risk or less risk?
So I'm gonna speak first on the winning. So if I've, and this is what I think now. This is not what I used to think a year ago. This is not what I used to think 2 years ago. This is not what I used to think 3 years ago. This is now, after 4 years of trading. After winning 5 trades in a row, I'm gonna be skeptical, and I'm gonna be like, there's a losing trade coming. There's a losing trade coming. There is definitely a losing trade coming. So I'm not going to risk less, or I'm not going to risk more,
Smart.
but I'm going to risk based off of the trade. If the trade is an A rank trade, I gotta risk my regular risk. If it's a B rank trade, then I'm gonna lower my risk. But overall, I'm not going to change how I am risking. Versus though, and this is kind of I think where I need to change the way how I think here as well.
Okay.
If I have 5 losing trades in a row, I'm going to lower my risk for my winning for like the rest of my trades. I am going to, and that's
Yeah.
because I don't want my losing streak to continue going on, so that my capital decreases, especially when you have a funded account, you know. And the reason why I feel like that's something that I might need to change in the future is because instead of looking at the losing streak, I need to look at overall how I'm trading in the extended period of trades rather than a winning streak or a losing streak, you know. And what I mean by that is like instead of looking at it, oh, you took 5 trades and you won 3 and you lose 2, or you took 5 trades and you lost 5. I need to look at it more of, okay, go and trade 20 trades. After you've taken those 20 trades, what's the outcome of those trades that you've taken, and what can you trade? What can you do differently inside of these 20 trades that you've taken, type of thing. But
That's good. And I want to piggyback
yeah,
off that
piggyback
real
off
quick
that. I just finished off. Perfect.
because that's perfect right there. And more people need to I could think like that more as well because in trading you like I just said, it is a legitimate unexpected outcome that is coming at you. You may have a great edge in the market. That's all that is an edge. Your strategy is just an edge. We still don't really know what's going to happen in the market. No one does. And it's very similar to flipping a coin in a way. I don't want that to sound elementary, but you're either going to win the trade or you're going to lose the trade. Okay? It's either going to go heads or tails. All right? And just like I said, it's an unexpected. You do not know what is going to happen when you place that trade. You just have an edge. So if you remove that edge, right? The reason you're placing the trade is because you have an edge.
Mm-hmm.
Your edge gives you a edge over a sample size of trades.
Ooh.
You need a bunch of trades for that edge to work. That edge does not work just on 5 trades.
Ooh.
So if you
Damn.
were flipping a coin, okay, if you were flipping a coin and it lands on heads 5 times in a row, are are you gonna bet more the next time that it's gonna land on tails? I'm not. I'm not. I'm just not gonna bet more that it's gonna because it's the same thing with your strategy. If you're up 5 winning trades in a row, you're not just gonna start betting less because you think you're gonna lose. Or same thing on the downside. If you hit tails 5 times in a row, you shouldn't think just because you've hit tails 5 times that it doesn't. Now, statistically, it should be the other way around, right? But when you have an unexpected outcome, you need to take that out of your head and you need to focus on what is really good. And out of 20 flips, even if the first 5 were all heads, the statistics are 50-50, guys, on a heads and tails trade, on a heads and tails flip. So it doesn't matter what happens the first 5, it doesn't matter what happens the first 10. What matters is after 20 to 50. And that's what people need to start thinking about with their strategy. Because it's an unexpected outcome, 50-50 really. Your edge gives you that hopefully 60-40, or your risk to reward gives you an edge. Something needs to give you an edge over a large sample size of trades to where you know, regardless if you lose 5, if you win 5, whatever this system is, after 20, after 50 trades, I should be good.
That's fire.
Um, and then we got one more for y'all tonight, and hope y'all are enjoying this. Hope y'all, um, you know, learning
Drop a
something.
like. First of all, y'all better drop a like. If you've reached this far and you haven't dropped a like, then do that right now, please.
Yeah, for sure, for sure. If y'all are still on right now, drop a like for us and try to share this with some other traders who might need this, right? Last question. What makes a trader move their stop loss when they are negative? Why do people do this, you think? Why is it when the market is dropping and they are in a buy, do they think that they should move their stop to, oh, I'm going to move it a little 20
They don't
pips
want to lose their
lower.
money. They don't
They
want to
don't
lose their
want to
money.
lose. They don't want to
I'm
lose
gonna
their
let, I'm
money.
gonna
Well,
let you
why
I'm
didn't
gonna let you dive deep into this, but that's the answer. They do not want to lose their money. They want to be patient with the loss, but they don't want to be patient when they're in profit. Because how many
Mm.
people do you see move their take profit? Only
Mm.
you won't see that many people. You will see much more people move their stop loss versus much less people move their take profit.
That's true. Um, a lot of people haven't fully accepted the risk when they take a trade. So they will, they think because they're trading, they are accepting the risk, but they haven't genuinely accepted the risk on that trade.
They
And
probably don't even know how it's calculated. They don't even know how much they're losing in the trade to begin with.
that's very true as well. They are just in this thing one lot deep, and they don't understand that if it drops 10 more pips, they're out of here, and uh if their stop, if they remove that stop, it could just margin them and they don't even know it. I think a lot of people also, they have this idea that they're like their strategy or they're correct, and it's just like, I don't, it's just a stop hunt, or I don't, the market is just going to fake this way because it always does this. I hear people say that all the time. The market always fakes out, and then if you have a stop loss, it hunts your stop loss. Guys, the market doesn't hunt your stop loss. The market creates liquidities and levels and runs through these levels near supply and demand zones to create liquidity levels for the market to move. There's no one out here grabbing your stop loss.
You're
So
not that important. I'm sorry to say it, but
please,
you're not that important.
yeah,
I'm not that
like
important.
there are market makers and they do not care about your order. Now, there are times in the market where your order and everyone else's order is in a very
Is
similar
this
spot.
exactly like there might be 100 million other people at the exact same spot that your stop loss is at?
Yeah, and that's just the reality of it. The market makers are going to see that level. They are the ones placing everyone's orders. So, yeah, they're going to go ahead and grab that liquidity because that's what they need. They have to have it. This is their market. They make the market.
Mm-hmm.
Y'all know that they have to buy the market when everyone is selling it. When
They
everyone
gotta.
is panicking, they have to buy. These places can go bankrupt so quickly, guys, if they're not ran on the right ships. So I just want that to be known as well. But people move their stops because they don't want to lose, and they're afraid to lose, and they haven't fully accepted that this game entails losing. And if you haven't accepted the fact that you are going to lose in this game, it's gonna be tough for you, dog.
It's gonna be
It's
tough
gonna
for
be
you to
tough for
win.
you, girl, because this game, you have to lose some to win some. This isn't the 90% win rates you see on YouTube are fake. 80% win rate
Even
happens
even look at
very
basketball
rarely.
or football. Look at all these guys that win championships and then
Look
go
at their
look at their
professional
record and then
records.
go look at their
Yeah,
records.
look at every single one of them. Look at a professional baseball player's batting average. 30%, 300. He hits the ball one out of every three times he gets to the plate. And he's a
And these are the
that dude is an
best. And
all
these are the
star.
best.
So like these dudes really hit it one out of every or not one out of every one out two out of every 10 times they get up to plate. So one out of every five times they get a hit.
So
That's so freaking lame. And they're in the
if you
pros.
have a 70% when even if you have a 50% trading strategy, give yourself grace. Understand that you're gonna lose. You're gonna lose trades. Just know how you're going to play it when you're going to win, so that you can end up being profitable in the market.
Right, exactly. It's all about figuring out how to go from oh shit, I'm really most people get into the market and they win at first weirdly because they don't know what they're doing and they aren't thinking and they're just going and that's good. But then once they start learning and thinking, they start losing and they'll start to lose their money. Then they go from losing their money to blowing account after account after account
To losing their mind.
then they lose their freaking mind and they either quit right there or that's either the spot where they go, okay, I'm never quitting, and they go all in. Then they go from being crazy, losing their mind, blowing accounts to just being consistent. And this is the point where they just go from, maybe they're not making money, but they're not losing money at this point anymore. And they're a consistent trader. They are very break eveny. They're good to go. They've got their risk down. Their psychology is almost there. They're good to go. Then you become somewhat of a profitable trader, and you will start being able to collect money from the market. And then after that, some people become crazy with this and their psychology can really take off to another level and they're able to take money out of this market like it's nothing. I'll be honest with y'all, I have not hit that spot where I'm able to
Not
just
yet.
generate money out of the market like crazy. I'm at the spot where I'm able to take money out when it gives it to me.
When
um
it gives it to you.
I'm a little bit over that consistent level, but um yeah, there's levels to this stuff, and we know that for sure. But that's it for us today. AB, do you got anything else to say
Nah,
tonight?
that was perfect. I cannot follow up on that because you just hit it out the park when you said that. I cannot follow up on that.
Cool guys. Well, we had fun with this. I hope y'all learned some stuff and got to learn a little bit more about us as traders as well.
Yeah, this was fun. I definitely can't wait for our next psychology talk because it gets
Yep,
to you guys get to understand a little bit about our trading journey as well as how we think about the market and different things, and it's important to understand that as well, in our opinion. So, yeah,
definitely.
guys. Well, with that being said, Pete, anything else?
No, we will see y'all tomorrow night.
All right, yeah,
Peace
guys.
out.
See y'all later. Deuces.